Hello and welcome to your September edition of the Rate Watch. Join me, your host, Chris Mulder, Toronto mortgage broker, as we do a deep dive into today's Bank of Canada rate decision and some analysis on where future interest rates are headed. You're not going to want to miss it. Let's dive right in. This morning, the Bank of Canada met market expectations by announcing no change to the overnight lending rate. Now, this decision wasn't a slam dunk, though, because leading up to basically until last Friday, there was a very real possibility that the Bank of Canada was going to be forced into another 0.25% increase to the prime rate due to ongoing elevated inflation. But on Friday, we got updated CPI numbers, which actually showed that the economy is starting to get sluggish. And in the Bank of Canada's report here, you can see they say the Canadian economy has entered into a period of weaker growth. Okay, I'll leave it for you, the link, so you can read it yourself. But they also say recent CPI data indicated that inflationary pressures remain broad-based. So we have these two conflicting ideas, which has prompted the Bank of Canada to hold the prime rate unchanged. The question now becomes, after today's decision, where do we go from here? Where are we expecting interest rates to head? Listen, predicting future interest rates over this cycle has been very difficult. Everyone has been burned, myself included. The governor of the Bank of Canada got burned. So it's been a fool's errand to try and predict. However, at the moment, the expectation is that we are pretty much at the top of this interest rate hike cycle. The overwhelming expectation of the market is a hold into next year and cuts in Q2 of 2024. Now, if we looked at this chart 12 months ago, it looked pretty similar to that. That was the expectation that we would have a recession in 2023, which never happened. So it just goes to show how difficult this is to predict. Now, you will see there's a slight chance of an increase, of a 25 basis point increase into the first part of 2024. However, the market is only pricing in the chance of that increase at 38%, which then implies that there's a 62% chance of a hold. Of course, this is all, it can change it with new data that comes out. But that's what the market expects today at this moment. Thank you so much for joining me today. I hope you found some value in today's content. If you did, please consider liking and subscribing. It helps me to create more content just like this. Until next time on October 25th, when the Bank of Canada meets, bye for now.